Hello, hello, hello. Everything froze on me. I don't know if we got anybody in here or not. What's going on? I don't know if this thing's working. Seems to be working. All right. Well, I guess I had a problem there. Technical difficulties getting started, but here we are. All right. My name is Lan Turner. We're getting ready to practice what we preach. Last Wednesday, we talked about the OCOs. One cancels other, one triggers other OTO orders. And you can hear me. John says everything's good. All right, good. So we'll get started then. I'm going to go ahead and turn this off. Let's see. We don't need that. And I'm going to come in here and take a look at the current market. This is the NASDAQ 100. This is the mini contract. I wanted to do the mini and the micro today just to show you a little bit of difference. So we're going to start off with the micro. And here's the micro market. And of course, that's the daily chart. We're going to come into let's start range bar 8. Market's moving pretty fast today. So if you'll notice the range bar, we might have to go out to range bar 12. I'm going to come in here and set this up. All of these are, there we go. Let's go save and apply settings to all charts. Now we should have all our same settings. Where are we at? We're at 7. We're running at 7 on the stop. So we're going to look and see if that exists. The market's just, it's sideways, but it's moving aggressively. Had a beautiful little move right there, and then it just kind of gave up the ghost. Well, that whole little time frame from 11:30 until it's like 12, about half an hour time frame was a beautiful little trend. A little bit quiet out here in the afternoon. Let's see. Had a couple of little decent moves that we could have caught right out in here, but we can't trade in the past, right? We have to trade in the future. Okay, we got a little bit going on right here. Oh, this looks good. All right, this is the Dow, though. This is not the NASDAQ. So we got the Dow Micro, the Dow Mini. Now, the Dow's a little bit smaller. It's still jumping around a little bit. Look how fast the bid-ask spread is jumping all over the place. We have to be careful when we do that. Now, last week, we started off very simple. All right, and we came in here, and I did a couple of one-on-ones with some of our students, and they still struggling a little bit with what I taught. So I decided I'm going to back it off even a little bit further. All right, we're not going to do the intercept orders. We're not going to do stop orders. We're not going to do limit orders. That was confusing to people. Now, I know some of you are probably beyond that, and you're like, come on, man, give us a little bit more extended stuff. But because I had a couple of students who came in, and they were still struggling just with the simplest things of the market orders. We're going to just concentrate a little bit on market orders here at first. We may kind of add in the stop orders, but for now, we're just going to kind of concentrate on the market orders. And we're going to make it really simple. If you remember, we talked about the directional moving average, the DMI, last week. And we realized that the DMI, the way I have it set up here, I'm going to come in, get your little cameras out if you didn't take pictures of this last time. This is my settings for the DMI. All right. Now, the DMI it's not a directional indicator. It's just a strength indicator. It's just a strength indicator. So the market can go down and be very strong strength going down, but the DMI indicator would go up during that time frame. All right. So it's just strength. That's it. It's not direction. Now the market's coming down here and it's coming down pretty strong. See that? So it turned the DMI up. Now we went up really strong, so it went up really strong. And then it started to come down, and then it started to go kind of going up here a little bit, but it's losing strength. See how it's going across here? It's just flat. So the DMI says, hey, the market's losing strength. So it's just a strength indicator. It doesn't have anything to do with direction. Just because it's going up doesn't mean the market's going to go up. All right. So let's clear out all that. So we just have to watch that for strength. So when the market is kind of dead, like it just went, you're going to notice that the DMI is going down. When the DMI is going up, it doesn't matter whether the market's going up or down. We can trade it because it's going up. It's got strength. So that's what we're going to watch that for. And then, of course, we watch volume. We want to see what's going on with volume. Now, we've got a little volume spike in here. So it looked like it tried to start to rally a little bit, but lost its energy. But we'll see. That's oftentimes when you get a little spike like that and it drops back down, you'll get a second little spike, and it's the second little spike that takes off. So if you start to see it rising after one of those, it's an okay time to jump in and put a little order in there and make a little bit of money. Now, we just made $35 off that one. We just had that's just a scalp. Now, I oftentimes will set up a scalp and a trail, but again, because some of our students are a little bit new at this, I'm trying to be a little bit more cautious. If you want to do a scalp and trail, what you're going to do is you're going to click the button twice, and then that's going to set your scalp. And then if you hit it again, another scalp, and then you grab the little limit order and just drag it out. Now you got a scalp and trail, all right, without having to have two buttons to deal with. You can just click the same button twice. It's going to put two scalps on, but because in track and trade, it's a drag and drop trading platform, you can grab that limit order and drag it to wherever you want, and that will give you the ability to trail. So we took a quick scalp. See that? How we took a quick scalp, but now we're still in the market and we still have a trailing stop on the green dot. So that's going to give us a trail. So it gives us the ability to rally. And if we just keep it that simple, we don't have to really do anything else. All right. You don't really have to do anything else. Just do that simple strategy right there and try and calculate where you think the markets are going to go up or down. And if you think they're going to go sideways, stay out. The whole key is knowing when to stay out, not when to get in. So getting in is easy. Getting in at the time when the market's going to rally is the hard part. And the best I can do is give you this directional moving average. All right. We can give you this little DMI in here that kind of tells you the strength of the market. And when the market's down below these two lines, at 20 is way down here, right? You don't want to be trying to take a position down here. Now, of course, if we watch volume, you can see where you're going to get a little volume spike and then a little pullback and then another little volume spike. That's where we caught that one, right? So we watch volume as well. But when the market's way down in here, it's really dead. So it's kind of trying to get up above these lines. This is our first threshold saying it's trying to get going, and then this is our another threshold. It's red because when it drops below it, that means stop trading. When it's green, when it says go above it, start trading. So we have a little gap in there, I mean, when it's going up, we want to try and get in early. That's why it's green. And when it comes down, it hits red. That means stop early. That stops us tries to stop us from trading a little bit earlier. All right, so we got a little ABC pattern too. So we could have got in right there if I was paying a little bit better attention. But you can see that little ABC pattern where the market rallied, right? And then had the little comeback. And now it looks like it wants to go again. So that's an ABC pattern. You mark those off with your little Fibonacci ruler, just like this, ABC, and then you kind of anticipate the direction or where the market might go. We can still put one in. We can go in there, we'll hit a second one. So we're going to do a scalp and trail. You either got two scalps, or you can let one go a little bit longer and see if it wants to trail. If the market's showing some strength, do a trail. If it's not, if it's weak and not doing big long trends that doesn't look like it's going to trend, then just do a couple of scalps. See if you can't scalp a little off. Right now we got two positions on. The market's not going anywhere. We got a bad feel because we waited. It would have been nicer to be down here. Where that little green dot's in. Now I got this kind of squished down. You're like, Lan, why do you squish it so much? It gives me a better feeling for where the market's at. When I do this, it looks like the market's really good, and it gives me a false sense of security. This market's not really that strong. And so by doing this, I can see, oh yeah, the market's really kind of flat. It's really not that strong. It looks strong, but it's not. When you do this, it's just a resolution thing on the chart. You can make a chart like, oh, look how strong that market is. Oh my gosh, market, we make so much money. No, that's not a big move. It was a little move. It was a small move. We need bigger moves than that to make money. So we're going to come in here and we're going to watch. The market's starting to die a little bit now. Now look how high that DMI is. The DMI is still up there, but it looks like it's turning. It's going to come down. You think that looks like a high DMI. Actually, I've seen it where these yellow and red, the red and green lines are clear down here, smashed against the bottom. So take that into consideration. This is also scaling. All right. So we can just sit here, and all you do, mostly you kind of sit on your hands when you trade. You kind of wait for an opportunity, and you don't want to take the first little move like that. Sometimes the market is against you. You got to think about it as they're trying to fool you into getting into the market at the wrong timing, because that's how they make money. So oftentimes the market will move in your favor and make nice big long moves, and you're like, oh crap, I missed it. And you didn't take the first little break one direction or the other. And so they fool you to make you want to get in, and so nothing's ever consistent. Kirk says, Land, just trade the arrows. We can turn the arrows on. And we come in here and we can say display the arrows. And there's your arrows. So we could just trade the arrows. But I want you to be a little bit more strategic than the arrows. And sometimes the arrows are like a crutch instead of a tool. All right. They're more like a crutch than a tool. You can just trade the arrows, but I don't want you to trade every single arrow. I want you to be more strategic about when you're going to trade the arrows. Only take arrows when the market, when this line is above that red line, or at least above the green line, and don't take arrows when that line is descending, for one thing. That means it's a weak market. And also, especially don't take the arrows when that line is below the red line. All right. Kirk says, hey, okay, I agree with you. Don't take every arrow. If you want to take every arrow, you just come over here to the autopilot and just turn it on and say, hey, just take every arrow. You can do that too, but we're not going to do that today. Autopilot is for another day. All right. So we're going to come in here and we're just going to trade this manually. And we're going to kind of wait and decide when we think we want to get into this thing. We're watching volume right here. Volume's low. We're trying to see if we want to get in. You could take the arrow right now. You could just do it. You could have got in right there. You could just, get in right now. But it's being a little bit quiet right now. I would like to see it start to prove to us that it wants to move again before I start jumping in. It's just kind of going sideways. It's not really doing anything here. So kind of feeling a little, it was doing so good, so well back here. And then, well, it did go through a little dippity do right here where it just decided it didn't want to trade again. So it went through that. And then it made a little move. I call this the death nail. If you've read my book, you know the death nail. That's what makes you think you're going to start making money. It goes up really nice, beautiful, and then it just dies on you right here. And you keep taking each one of these arrows thinking it's going to move. And so that's the death nail because it gives you the impression that the market's going to move and then it doesn't. All right, let's see if we can take a short position right here. We're going to put in 2. See if we can't catch a second one, do a little bit of a run. So we're going to do a little short one in here, and then we're going to do a little run. Now, this is the mini. I was going to show you the micro, but that's all right. This is the Dow. It's a little bit smaller. It's not the NASDAQ. We'll switch over and look at the NASDAQ. I've also got silver up, and silver is a fun one to play with. So Kirk says he's trading along with us. He's using the 2-minute chart. And sometimes we trade on the 2-minute chart. Kirk knows that. So he's using the 2-minute chart right now, and he's got an ATR on 8. Are you on the Dow? Are you trading the Dow, Kirk? Oh, we're going to get stopped out. Oh, you're on NQ. You said right there. He's on NQ. Is it moving better for us? Look at this thing died again. I thought maybe we get a little bit better drop out of here, and it didn't. Look, the directional, the DMI is clear down here, just dropped below the red line. So that's no fun. Let's go see if this market that Kirk's looking at is moving a little bit better. Let's look at the 1 minute. He's on the 2-minute. It's pretty dead. All this is pretty dead. It's started to move right now, though, a little bit. Let's go up to the range bar 8. We get, ooh, even with Heiken Ashi, that thing is ugly. So smooth, smooth, smooth. That's the trend. Choppy, 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 choppy. That's the counter trend. Smooth, smooth, smooth. That's the trend. All right. So keep that in mind. Smooth, smooth, smooth is the trend. Choppy, choppy, choppy is the counter trend. So we got a smooth trend coming in. Oh, it still doesn't look very good. I don't like this chart, Kurt. Let's bring this thing up to range bar 12. See if it smooths out a little bit. Ooh, that looks a little bit too big. A little bit too big. What did I have before? 8, 9, let's 8 to 12. That was too big of a jump. Let's come down here and let's go 8 to, let's make it 10. Just go 2 up. I hate Windows for that. I hate when you do that, Windows. It drives me crazy. All right. That's 10. Let's try 10 for a minute. All right, on the NASDAQ with Kirk. Let's go back over to trade and see what we're doing here. So, ooh, down, up, down, up, down. We're not getting a lot here. Getting these little spikes of bullishness in here. So people are not confident in the downside. What they're doing is they're selling and they're buying. So they're selling in the downtrends because this is the downtrend, right? And then they're selling in the downtrend, but then they're not sure, so they're taking profits. Buy, 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 buy. And then they'll sell, 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 sell. Buy, 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 buy. Sell, 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 sell. They're going to do a little buy, 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 buy. Now the problem is I don't think this is going to be a turnaround. No, see, it's just a little buy, 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 buy. The trend is down, but now we've gone 3 downs. I don't think we're going to get another nice down. Try it. Closed our position. We got 56 and $85 out of that one. It got a little bit down, didn't it? It's still a little choppy. I want it to be a little smoother than this to trade. Okay, we want to see it. What we want to see is we want to see it make a little ABC to turn around to say that it's going up. Otherwise, it's still going down. Let's go sideways right here for a little bit. Let's see if it's going to go give us this little reversal pattern. We want a little reversal, a little ABC bottom formation. So here's our line. Is it going to go down and break a new low? Needs to stay above that. Is this our, okay. Is that our ABC bottom right there? Is it going to break lower and just keep going down? Yep, it just tried to break the low. It's trying to break the low. Failed. Failed to break the low. All right, are we getting our little reversal here? We got too many lines going on. Okay, let's put this back. Send back. This one goes here. This one goes here. Oh, it's failing again. It failed. It's going down. Ooh, and we're missing it. So that means we're going to do one of these. Take that off. This is going from here to here to here. Went all the way down to 161.8, right down that thing like a train on rails. It's trying to turn around, make a little ABC bottom formation. It's trying to get bullish. Volume on the bullish side is low. See the green bars down here? Bullish side is low. C-Boss is asking me what I think about Bitcoin. I have one Bitcoin. I bought one Bitcoin. I bought it over the last week. I've put it in. I bought my Bitcoin over the last week. Do you guys all have a Bitcoin? Everybody should have one Bitcoin at least. I'll show you. That was part of a different class, but since C-Boss asked, I'll pull it up and show you. All right. I don't think I've updated this since I did my Bitcoin. Yeah, see, let me go update it. Hold on. Let me look and see what I've got going over here. I think I got more than one Bitcoin by a few dollars. I was trying to get it right on one Bitcoin, but you know how that goes. So I own one Bitcoin. Now, the situation with me, what I did is I had a whole bunch of derivatives of Bitcoin, right? I had MSTR and I had BitO and I had a bunch of these things. And I made a whole bunch of money. I made about $100,000 in Bitcoin last year as it made up that big run. I had one Bitcoin. And then I took that off, took all that profit, and I put it into these derivative funds. And they did me good. I mean, I made a bunch of money, but then in the last 3 months, they flushed like toilets, right? And so I took the money out of the derivative funds. Not all of it. I still got some over in another. This is one fund that I took it out of. I got 2 funds. And on the other one, I've still got some of those MSTY and Coney and some of those things looking for the rebound. And I took that money and I just put it into Bitcoin proper. So my quantity is, I have 1.0104 6921. That's how many Bitcoin I have. I have one Bitcoin. And I have an average price on it. What I pay for it? Average cost, I paid $91,450.33. $91,450 is what I paid for my Bitcoin. My profit and loss on it right now is 6,186.74. And Bitcoin's trading at 90, right around 98,500. So my profit is $600 or $6,000. And that's in the last week. That's gone up because I bought it last week. Charts. So we can go look at Bitcoin in here. Bitcoin. Let's look at micro Bitcoin. That's micro Bitcoin. Let's go look at micro Bitcoin just because it's fun. Okay, this is the daily chart of micro Bitcoin. So I started buying back in here. I started buying down in here my Bitcoin, and then I bought some more right in here. So that's why my average price is 91. My average price is right there, 91,450. 91,450, which is right here. Do you guys have your Bitcoin? 91,450. It's about as close as I can get. That's my average price. Again, I started buying here, and then I bought some more yesterday, right in here. It brought my average price up to that line, and it's starting to rally. So I don't know. I say I held a bunch right through here, and I lost a bunch. So I wanted to get it back. get backitis. I got some get backitis. So I put it into Bitcoin proper because over here it was just in the derivatives. It was just in the ETFs. And so now I put it back in here and up it's going. So that's good. Let's see what else I got going. In my other one, my IRA, I've still got Misty, and it's up 3% today. So that's good. So yeah, Misty. But over in I actually had that loss, and so what I did is I used it as my Misty in this account is I used it as in this account here, I used it as a tax loss harvesting. So I sold it, took that loss that I took in that last 3 months, and then I'll write that off against my taxes against my profits, and I'll be back in much better shape. So you can see right now my portfolio is sitting at a 69% annualized return. And I started with 476,000. I've taken 120,000 out in cash, gone and spent it. So that puts me at 447,000. 447, yeah, not quite. Well, that's 69% cash cow below break even. So I'm at 69% annualized return. I have 108,000 in stocks and options that are not part of this. This is my yield max portfolio. Total capital infusion 427. I've earned $7,600 in interest this year. Total dividends 142,000. That's just off of these 6. I've eliminated all the others, so this is just off of the 6 that I'm still holding. 1, 2, 3, 4, or 5 that I'm holding. I'm only holding five markets. So the dividends from those 5 was 142,000. But I've made a lot more than that because I have a bunch that I've taken off. So I had Palantir. Oh, I still have Palantir in here. Yeah. But I had Snoy, I had NVIDIA. I have a bunch of other ones in here that I've taken off. Tesla. Do I still have Tesla? I don't have Tesla in here anymore. I took Tesla off because of the tax loss harvesting. Anyway, you asked. Now you know. Yes, I have 1 Bitcoin. I am back into it with 1 full Bitcoin. So total 98,000. I paid average cost $91,000 for my Bitcoin. It's about what I paid for it last time too, if I remember correctly. I mean, last year when I did my Bitcoin, let's go look at a weekly chart because it ran up and then it turned around and came right back down. Do we not have a weekly chart on Bitcoin? There we go. Oh, we don't have enough data, historical data on this one. Let's go look. Let's go look at. Oh, I don't have it. Let's just pull up Track and Trade. It's got BITO in it. I've been trading iBit vertically recently. I also have Bido. Kirk has some Bido. I I don't know if I still have any Bido. I had Bido. I had Bido. I think I got rid of my Bido in one account. Do I have it in the other one? No, I got rid of all my Bido. And I just bought the outright. There's Bido right there. So I don't have Bido anymore. It gives a good dividend though. So that's Bido's turning around. So so let's go see on a long-term basis. Weekly. See, that's about where I bought it last time. It's the exact same spot I bought it last time. I was gonna say, I think I paid the same amount of money for it last time. It was a little less than $100,000. I think that's right where I bought it last time. Turn on Heikenashis. See, I bought one Bitcoin right there, and I rode it all the way up like that, and then I sold it. I took the $100,000. The market came back down, and I got into Misty, MSTY, Bido, Coney. I put it across two or three of them, right here, and I rode it all the way through there, and it went up and down and up and down, and right in here, I was like, well, what's it going to do? And I still had and I made some dividends through here, so I did okay, made money, and then suddenly this thing flushed like a toilet like that, and then it came into the end of the year end, and I was like, well, I need some. I've made $450,000 in the stock market this year. I need some tax loss harvesting. So I went in, and those funds that were all losing money, right there at that point, I had all those dividends that I made, and then I lost on the NAV right there. So I just liquidated the NAV, liquidated the growth side, and took that as a loss against my dividend profits. So I got out right there. But I can't get back in for 30 days, and so I was like, pissed off that I had to get out for 30 days. And the market started to rally. I mean, it started to show these real strong areas of support down in here, and I felt like we were going to get a turnaround right in here. And I didn't want to miss it, and I couldn't get back into Misty. I couldn't get back into Bido. So I went and bought the underlying. I went and put $100,000 into Bitcoin itself. Now, it's not going to give me any dividends. That's the problem with being in Bido, and that's the problem with being in the underlying stock. It's like being in Tesla, TSLA, or TSLY. Why would you ever want to be in TSLA? They don't give you any dividends. You don't make any money. You can't live off of it. It just grows. And that's nice. I mean, you can eventually sell it and take your profits, or you can borrow against it or whatever, but you get you're getting your growth, and that's good too. But the reason we like Tesla versus Tesla, the reason we like Tesla versus Tesla, the reason we like Bido versus why can't I think? My brain just went dead. Bido versus BTC, which is the actual underlying currency, right? The reason we like Bido is because it gives us a dividend. We can live off it. It takes profits along the way, right? So we take profits along the way and we live on it. For those of you who don't need income, you might want to be in the underlying. That's why I don't have a problem being in the underlying. I don't really need the income. I make way more money than I need to live. But some people don't. Some people need everything they've got to live, so they want to live off their dividends. Well, then you should be in Bido, not in BTC. If you're in BTC, you get the growth, but then you have to sell it to live off of it, or you have to borrow against it and pay interest on it, right? And there's not very many places right now that'll lend you money against your Bido or against your Bitcoin. There's only a few, and they charge you a huge interest, like 10% interest to borrow against your Bitcoin because it's so volatile. But if it goes to $1 million, well, great. Yeah, you have $1 million. But then you can take it out and put it into Bido. You can put it into Bido, and then you can live off of it and get your dividends, right? That's what we want. We want dividends. If you want my whole channel, everything I teach, the university classes that I teach, everything is all about UBI, universal basic income. I want to be able to live off of my portfolio. I don't want to have a job. I don't want to have Social Security, rely on Social Security. I don't want to have to do any of that stuff. I don't want to have to go to work. I don't want anything. This is my work. This is what I do for money. I sit here at my computer and I make money through the stock market. And one of those ways is buying low, selling high. You can do that. You can buy low, sell high. You can sell premium on options. We do a lot of that in this class. I love that. That's one of my favorite strategies, which is why I like the Yield Max funds and the Granite Share funds so much, because that's what they do, right? We talked yesterday about my strategy for trading options. Bitcoin. I love Bitcoin. I've been trading Bitcoin since it was at $12, believe it or not. I had a whole bunch of Bitcoin, paid off my son's college education with it. I put my son through college with Bitcoin money. Not all of it, of course, but a large percentage of what I paid for my son's education, for his college education, was Bitcoin. Had I known the Bitcoin, when I bought it, I started buying Bitcoin. I actually had servers, and I was doing the mining and doing all that kind of stuff. I really got into it back when it was $12 a Bitcoin. I've been trading Bitcoin forever. I like Bitcoin. Made a lot of money on Bitcoin. Paid my son's education off on Bitcoin with Bitcoin. But I told him one day, I said, if we would have just held on to the Bitcoin and not paid your education with the Bitcoin, we'd be rich beyond our wildest dreams. You'd never have to have a job again. You wouldn't have had to ever go get educated. because Bitcoin went up so high and we spent it, sold it, used it, right? It's the nature of the beast, though. That's what you do. You use it to make to live life, and so then you spend it, and then it goes up, and you don't have it because you spend it. So now that's what Bitto's so great with. That's why you put your money in Bitto, is because you keep your shares, but it pays a dividend, and that's the nice part, is that Bitto pays a dividend, whereas BTC does not. It just has the straight up growth. All right, so you get your money along the way. If you don't need your money along the way, you can just be in Bitcoin and don't take your money along the way. But if you want the money along the way, because the problem with taking your money along the way is it comes to you every month. You get this nice payment every month, and you're like, oh, I can take that and go live on it. That's what you want, right? You have to pay taxes on it. So if you don't need it, don't take it, because then you don't have to pay taxes on it. Just think about it like that. All right. Okay. So that's enough about this class. We're going back into our class from yesterday. All right. Let's get back over here and see if we can't do a little day trading. We can day trade Bitcoin too. Let's come in. We go down here to a range bar 8 on Bitcoin. Let's see what it looks like. We've tried this before and it wasn't moving very much, but it's been moving a lot lately. Look at that. Hey, it's moving pretty good right now. Let's go down to range bar 6. See if we can go down a little smaller. Fibonacci's. I don't know if I want to go down 6. Maybe we can do 6. Boy, it's getting tiny over here. Let's come in here and fix the chart preferences. I don't think that needs to be 25 at this level. Let's do 50. It's probably close enough. Look at it, a big gap. That's the problem. See, we're using look at the gaps. See, it's hard to day trade because look at the gaps. Wow, it's gapping like crazy. So it's hard to trade. It's hard to day trade with those gaps. I mean, you turn on Fibonacci and it hides the gaps, but gives you the trend, but it hides the gaps. But if you got to realize, hey, oh, geez, look at the gaps, nasty gaps. So I don't want to trade that. I don't want to day trade that. We'll come back. Oh, look at what we missed. Just trade the arrows, land. Wow. Look at what we missed. We'd have got stopped out right there. I don't know if we'd have been smart enough to get back in right in here. We might have. I don't think we'd have got stopped out there. Maybe there. I don't know. We might have ridden that thing all the way up. Coulda, woulda, shoulda. Didn't do it. We were off goofing off with Bitcoin. I'm going to blame C Boss because he distracted me. Look, squirrel. Okay, what's going on here with range bar 8? This market's just suddenly stopped again. Come on. Are we going to get a down arrow? Watch, we'll get a little tiny down arrow. We'll take it, and it'll pop right back up, and then it'll flush like that. That's what happens all the time. Well, then why do you take it? Well, because how many times have you not taken it? Because you're thinking it's going to pop up like that, and then it just went like this. That's why. That's why you take it. That's why you have tiny little stops, because you want to take some of these breakouts. I mean, look at this line here. It's way up there. Let's go look at NASDAQ at 10. Ooh, that's dead. See, boss, you saved us from trading that one. Oh, there it goes. Go back to Dow. Quick. Look at the Dow. Trade. Buy. If the NASDAQ ran like that, maybe some people will go over and put some money in the Dow too. We'll see. Come on. Pop up like the NASDAQ did. Why gold not stand down? Because China and Russia are trying to create the BRICS, and it keeps going up because they've told their populations of their countries to buy as much as they can get their hands on. My son's been buying gold as fast as he can make a paycheck. Silver's doing the same. Silver's useful, though. Gold's not useful. What do you use gold for? Nothing anymore nowadays. It's too expensive. We don't use it for anything. Right? We can try that Dow one more time, see if it's not going to go once more. I don't know. You going to go again, Dow? I don't think so. I think we're going to get flat market or pullback. Only went in with one just in case. But silver you actually use. We use silver in I got stopped out. We use silver in industry, right? We use silver for lots of things. But we don't use gold for anything anymore. It's too expensive. We used to use gold in all of the oh, look at that. Is it going to go? We used to use gold put it in our teeth, right? Now what do we use gold for? Nothing. Jewelry. It's the only thing we use gold for. And money. We use it as a currency. Gold has become a currency. It acts like a currency. We treat it as a currency. We don't use it for anything at all. We don't use it in any industry at all, except for jewelry. Very few things have gold in them anymore. You used to use it in computers all the time, but it got too expensive. They still use it once in a while in some computer stuff, but not very often. Yeah, Kirk said the same thing. Computers, but we don't do it so much anymore. It's too expensive. We got caught a little run here. Let's see if we can keep it going. We'll pull back. We'll try one more. Come on. Don't die on me. Not right when I put one in. Flush. Flush. I actually don't want it to flush. I'm long the Dow with real money. I want the market to go up. Come on, don't do this to me. Go down, you little dirty dog. You want to see my settings? I know, I hear it out there. You guys are, what are your settings, Lan? How do you set up all those little orders like that? How do you do that? I'll show you. Scalp one. There's my settings. That's what I'm doing. Just got stopped out again. Doggone it. I can't catch a runner. That's my settings. All right. That's that one. And then this is the other one. It's exactly the same thing. The only difference is it's backwards. The first one was a buy. The second one was a sell. And we're just using market orders right now. Just keep it simple because I talked to those students. And they were like, Lan, it's too hard to use stop orders for entry. Okay, let's not do it then. Let's not do it. Come on, baby. Pick up the pace. Look at our directional moving index, DMI. It's headed down. Let's see if this little pull will turn it to go back up. Okay, we made a little bit, 40 bucks. Remember, you got to take commissions and fees out of these numbers. Whatever your rates are. We need the market to move. Need the market to move stronger, bigger, faster than this. That's why we like to oftentimes trade the news events, right? Trade the news events. Trade first earlier in the morning. I don't like to trade the open. I don't like to trade the first. Oftentimes, I don't even like to trade the whole first hour. I like to trade oftentimes about the first, after the market's been going for about 30 minutes, I like to trade. I'll start trading about half an hour into the market. I don't like to trade the open. It's too crazy. You know why the market's so crazy on the open? It's because of these little things right here. Because of these little devices right here. See these things? You guys, any of you guys have one of these? Any of you have one of these things? I don't know. I'm probably the only one here that has one of these, right? Little iPhone thing. That's why the market goes crazy in the morning. What? What do you mean? How does that have to do with it? What does that have to do with it? Everybody comes home from work. Market's closed. Market closes in 20 minutes. It's only 2 o'clock here my time. We still got till 5 o'clock till everybody gets off work, right? Then they come home. The market's closed. What do? They sit and watch YouTube, or they watch the news, or they dink around, or they play on their little iPhones, and they're like, oh, look, Donald Trump says this is happening, or, you know, Kramer says this is happening. I think I'm going to go in and buy some of this stock that Kramer talked about, or I'm going to go in and buy this stock because Trump's doing this or that, or whatever, right? Whatever their reasoning is, they decide they're going to place an order and buy some stock after the market's closed. And they can do it with their little cell phone. So they go in and they pop in there and they go, oh, I think I'll buy some of this, or I'm going to buy some of that, or I'm going to buy some of this. Well, when does it get filled? It gets filled when the market opens. 7:30 tomorrow morning, boom, market opens. And all these companies that have these little iPhone apps, right? These little Google apps, these little app phones, they go and start filling orders for everybody who's placed them in the middle of the night. So the morning bell is a nightmare of just orders being filled and taken off, because not all everybody's getting in, right? A lot of guys are getting out. So everybody's getting in and out of the markets. They put their orders in the middle of the night, and they're all executed on the opening bell. Bam! It's not people in there excited about trading. It's all these big, huge brokerage firms doing their balance sheets, buying and selling, matching people up. That's why you don't want to trade the morning bell. You got to be a nut job to trade the morning bell. I know guys that do it, but I think it's you got to be a nut job to trade the morning bell. Look, we caught a runner. Is it running? I hope it's running. It's running a little bit. Let's see how long it runs. We did a scalp. We got our 50 bucks on the scalp. Now we're doing the trail. Let's see how far this thing falls. Flushing 20 minutes before the bell. 15 minutes before the bell's closing. How far is it going to go, Lan? Well, we generally expect it to come back to the Fibonacci sweet spot, right? You guys know Fibonacci. It's just a ruler. So all we're going to do is we're going to measure the delta cone of probability. What? What's a delta cone of probability? Well, it's this cone right here between 38.2 and 61.8. It's the high probability return point of the market. It likes to go down to what we call the delta cone of probability. And that's actually a mathematical formula that comes from trading options. All right, there's no options on this one. What are we trading? Dow Jones, mini. There's no options. You have to do that on. But nonetheless, if you were trading options, it would be a mathematical formula that would be calculated for you right here in the probability columns of this market. And that's what gives us a Fibonacci ruler. It's the delta cone of probability that comes from options, right? Most people don't even know that. They don't even realize that. That's what that is. That's how that works. That's why markets go to different locations and places. It's because of options. Oftentimes because of options. Options have a lot of buyers and sellers, and they don't buy right at the money every time. So oftentimes you'll end up with a huge amounts of orders for getting in or out of the market way down here based on options. So options volume is very important because it's off the books. So you don't see it right here. You don't see it till the orders fill. And then the market comes rolling down there to fill all those options. And then as it fills all these big, huge chunks of options, that'll turn the market. Yeah, there's our bell. 15 minutes until close. Look at us go. We're up 260 bucks with one contract. Land, why didn't you have more? I did. I'm doing scalp and trail. I had one closed. I got it. 50 bucks. That was cover my expenses. Now we caught the trailer. This is how you trade. You just have to wait till you catch a trailer and then you let it trail. Now I can come in here and say, look, I don't think it's going to go down any further than just this, maybe right down in here. So if I want to, I can put my limit order right in here because I want to maximize that. Because if I got out right now, I'm only going to get 23 ticks. So I can now, I got a long ways away. Look how far away I am. My stop is on that little green dot. That's $165 out of my $300. That's 50%. I'm losing, risking 50%. So I can put my limit order in there as I think we're getting down towards the bottom. And I can even grab this stop and say, you know what, let's pinch it. It says, do you want to control it? Yes, I do. I'm going to bring this down and control it. If it goes down, I'll get out at the limit. If it goes back up, I'll get out on the stop. There, we're out, 260 bucks. Now, if it keeps going down, don't cry over spilt milk. You could have let it go down longer. You could have just let it trail on that little green dot, but that little green dot is getting further and further and further away. Yes, what'll happen? Well, it'll come down like this and it'll turn and start to go back up, and that green dot will come in and intercept it at its very best location, right? Kind of like right there. See that? It intercepts it. Actually, a pretty good location, but sometimes this market will just turn right around and pop right back up, and you'll lose half of what you had because it hits that green dot. Now, right now, the green dot's right there. What could you do? Well, see there, we got stopped out right there. About the same spot. We actually got a little bit, I don't know, about the same place. I don't know if we'd have made any more money, any less. About the same. But we got 260 bucks up. That's pretty good, right? Now we're working from a point of strength now instead of a point of weakness. So range. Oh, well, that's the same one. What about this one? This is the bigger market. If we trade in this market, oh, this is a mini. Let's go trade the micro. Let's go see what silver's doing. That's range bar 6 on silver. It's not, I don't know. Wants to go up. That would have been a good buy spot. Nah, not so much. Not so much. Been a break even, make money. Your stop's a little close for this one. Yeah, it is. How do you change that? Right here. Boom, boom, boom. Just push your stop out a little bit with that number right there. See that? Adjust your stop. It also adjusts your entry. I like to run it pretty close. I like to run it right around 7. I generally start at 1 to 1, ATR period 1, stop factor 1, and then I move it and adjust it from there. If the market's moving well, I'll stop factor that thing down, bring it down tighter, make that number closer. It's kind of running out of steam up there, isn't it? Look at the DMI. Kirk's saying your 10-minute, what's he saying? Your 10-minute to the close can be crazy pants. Oh yeah, let's not forget that. 10-minute bell, the 10-minute bell goes off. That's when I think a lot of quant systems get shut off 10 minutes before the bell rings. And so the market flips and jumps all over the place. We made some money last time the market fell. Let's see if we can't flush some here on the silver. Problem is the spread's so wide, my stop is so close, I just get stopped out on the spread. Still want to go up? Look, we gave all of our money back. Silver's big. That one little stop was 300 bucks. This is a big market. You're gonna have to catch a nice trend to make it. Oh shit! Now we're gonna be down $300. Be careful. Silver's a big market. You don't want to dink around with this one, man. If it's not got a good signal, don't take it. And we ain't got no good signals right here. We ain't got no. Okay, let's make some money, buddy. Let's see you rally. 10-minute bell. So you go up, and away. Come on, little silver. Oh, dying on us again. Don't die. The only way I can make this silver go up is to grab my little, this little guy here. Go up, silver. Go up. Green, 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 silver. Go, go, go. You think it's going to help? Come on, silver. Go up. Don't come down. Come on, silver. Come on, silver. Da, 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 da. That's my ability to make markets move. That's how I can do it. That's all I can do. Gives us a signal to get in, you get in, and all you can do is just hope that your voodoo science can make it go up. Come on, voodoo science. Oh. Yeah, you get a stab in the neck for that. Oh, we're getting our heinies handed to us. Okay. Let's try one more time. It ain't gonna fall, is it? It's just playing traps on us now. It's just like anybody who's gonna still be trading at this time at 10 minutes before the bell closes, we're just gonna go back and forth, and give them little buy signal, sell signal, buy signal, sell signal. We're just gonna capture them, we're gonna trap them, and we're gonna take all their money. That's what they're doing to us right now. Just be mindful that's what they're doing to you right now. Good thing Track and Trade gave us $530,000 of practice money. Okay, let's see if this one's going to trend. Come on, buddy. Come on. You got deep pockets to trade silver. It's a full-size Colmex silver. Oh, it's not going to do it. It's not going to keep going. My gosh. Getting our heinies handed to us. We're having fun, though. Practicing with the tools. You can see how to do it. Oh, see how not to do it. Let's go play something else. This is no fun. NASDAQ. It's no fun if you're not winning. Better to lose and find that out in the real market than it is in the torture market instead of the real market. We're right here at the end of the day. We're not going to make anything. No. My little trades over here on the NASDAQ mini are not going to help out our silver losses. We have to keep trading silver. If you're going to lose silver, you got to make silver. It makes trading over here seem small, doesn't it? And the NASDAQ we consider to be the big one. You go trade the Dow, it's even smaller. Come on, you stupid little donkey. We already had the 10-minute bell, didn't we, Kurt? Yeah. Now we're catching a little trend on the end here. There's 3 winners in a row. Come on, keep it going. That was good. Now it's going to die right there. Got to catch a mover. You got to catch a mover. Once you catch a mover, just keep clicking that button, man, taking money off. Just keep clicking that button once you catch a mover. But you got to catch a mover. Nothing wants to move right now. Is my clock wrong? Is that the 10-minute bell? That looked more like the 10-minute bell. There's 3 winners in a row. Now we're going to catch a loser. Oh, we got another winner. Winner, winner. Here we go. 4 winners in a row. 1, 2, 3, 4, 5 winners in a row. All these little tiny chippy things. This is terrible. Terrible. At least we're getting back a little bit of the money we gave up on silver. This market's dead. Look at it now. It's just going sideways. A lot of movement, but a sideways movement. Kirk's trading the minute charts. You could come in here. We've only got 5 minutes left, Kirk. Little OCOs don't work good for this market. It's too big. I mean, 1 minute charts, they're set up for the range bar charts. Trail ATR. Oh, we got 2. Let's come in here and go 2. All right, let's see where it goes. Just the last 5 minutes. See if it'll rally. Let's see if we can get a little rally out of this thing on the 1 minute chart. Slows things way down. You're not playing quite so tight to your chest with the range bars. Oh, but you can take a bigger risk. Come on, we need a little rally here. Going into the close. Everybody wants to own the NASDAQ going into the close. Don't you? Don't y'all want to own the NASDAQ going into the close? I can do pretty well at this if I just kind of set it off to the side of my computer screen on one of my monitors, and I work over here during the day. And then when I see the market like start to move, I don't have to sit here and concentrate on it all day. If you just sit here and concentrate on it, it's really hard to trade. What you do is you kind of set it off on the monitor on the side, all by itself, just sitting there, watch the market going by. And then you're working over here, and then it'll catch your eye when it starts to move. And you can go over there and hit a couple of trades, make $500, and you're done for the day. That's the way to trade it. It's sitting here doing what we're doing right now. This is just, practicing the tools, and that's fun. But to actually trade it, you don't sit and trade it all day. You just sit there with it on the screen, and while you're doing something else. And it might sit there for 4 hours and you not do anything. And then suddenly you'll see the market start to move. Maybe the government report, maybe a news event, maybe some big traders come in and decide to, lunchtime's over, whatever. There's things that'll trigger the market and it'll start running. And then you can come over and use, oh, well, there's a signal, and you pop it in there and you make $500 real fast in 6 minutes and you're done. Don't try and sit here and trade this thing all day long. Because if you just try and take every single arrow back and forth, you'll just give your money up to somebody else. It's better just to wait for the market to start being crazy a little bit and seeing these little smooth trends in there and grab on. And that's it. That's how you trade. I know people want to sit here and feel like they're trading all day long. You don't. That's not how you trade. You sit there and wait for hours and never do anything. I mean, this is the best tool right here for trading. Let me show you. This is something I've been doing for trading. This is how I trade. You guys ever seen this? Hold on a second. I'll show you the best trading tool in the world. Right here. Best trading world. You cannot, I'm telling you, it's the Land's secret trading tool. Right here. Hold on. It's coming. Land's secret trading world. Right here. Can you see it? That's the best trading tool you'll ever have right there. Do you know what it is? It's those little tile games you play. And there's no timer on it. And what you're doing is you're just matching tile pictures, right? And then they go away. So you sit here and you go, oh, look, this one and this one. Oh, I've got a match, and it goes away. And you sit here. This is how you trade. You sit here like this, and you play this little tile game, and you take your little tiles off, match your little tiles up, and you can play this game for hours on end, and it'll keep you busy while you're not trading, keep you from trading. And the whole idea is to keep you from trading, because trading is how you lose money. Over trading is how you lose money. So you sit here and you play this little game all day while you're trying to wait for the market to move, and then you guys kind of keep one eye over there on the market, but really you're just playing your little game. And it's not a game where you have to like be active. It's like you can stop playing at any time. You're not held by the game, right? That makes sense. There's market close. Market just closed. So you're not held down by the game. You can just sit here and play the game. And as soon as you see something, you could drop the phone and you don't say, oh no, my game. You can come in, you can do what you need to do. Take your $1,000. Okay, we just took our $1,000 off the table and we're done. And you do it, just play your game while you wait. That's how you trade. That's the secret to trading, is keeping yourself occupied doing something else other than trading. Because when you just sit there and stare at the charts all day and trade, that's where you give all your money to somebody else. All right, guys, that's my very best advice for trading. Kirk says, yep. Yes, be observant. It is a test of patience many days. Yep. And sometimes, you don't put in a single trade. You just sit there with that thing sitting over there on that side of that computer. You're doing stuff over here, and the market never does give you an opportunity to feel like you can get in and trade. But we did pretty good on that 1 minute chart. We got $1,000 on that last little move. We just got our heinies handed to us right there with silver because it never would move. And we're having fun in silver, though. All right, guys, that's it. That's all I got for you today. Okay, Kirk. We'll catch up with you guys later. I hope you're having fun. Enjoy your trading because, if you lose money, at least you paid for some fun. All right. So that's the name of the game. Just remember, there's one up for every down. You just don't know how big those ups and downs are going to be. And that's your part of the game. Figure out when the market's going to make big ups and downs, because there's one up for every down. All right. See you guys tomorrow. Tomorrow, we're going to follow up with our UBI portfolio, and we're going to go out and do some research and find out what we can put our money into. I'm still stuck out of the market because of my taxes, but I've got some other things we can look at. So we'll go do some research. All right. We're going to do some discovery. All right. See you then.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.